This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Today we have a very unique situation in the stock market, which is very difficult to read, but I'm going to take you through my thinking, which is going to end up being my plan for the next week or so. And when I look at the S&P 500, 25% of the weight of the S&P is contained in 5 companies, okay? And the S&P is only down 7%, okay? I think it has another 13% to go at least. And I think it's mainly because of these 5 companies that it's held up so well. But I do expect them to come down. Again, these are massive companies. Apple makes up $2.8 trillion of the stock market of the S&P 500. Microsoft comes in at a strong second place with a $2.3 trillion market capitalization. Third place goes to Google or Alphabet at a $1.8 trillion dollar market capitalization. And then along comes Amazon at 1.5 trillion, and finishing out is Facebook, or Meta as it's called nowadays, but they still keep the FB symbol, but they have a $840 billion market capitalization, so they're approaching 1 trillion, and they should be at 1 trillion, but they've been undervalued for a long time now. What's kept the market from going to the center of the earth is the positive earnings, especially from Apple, but Microsoft helped too in a massive way. And they were both very positive in their earnings. And so they held up the market. And Apple literally turned it around single-handedly after it reported on Thursday night. And on Friday, the market took off for the moon. There will be more drama this week, complicated by a lot of factors. 3 of the giants report earnings this week. On February 1st, Tuesday, Google or Alphabet reports earnings, and I expect those to be mostly positive. I think Google does well regardless, mostly because the economy supposedly is doing well, and they benefit whether people stay home or whether they go to work. I mean, they're so integrated into the internet, and YouTube is so integrated into our lives that I will be surprised if they're not a positive effect. On Wednesday, we have Facebook. It's the 5th largest giant, but on Wednesday, February 2nd, we'll have Facebook or Meta report, and I'm less certain about them. I think they could be somewhat on the downside, just because people aren't staying at home quite as much and probably aren't spending as much time on Facebook. And also they have increased costs because of the metaverse. On Thursday, February 3rd, Amazon reports results. And again, I'm somewhat mixed on this one. I don't think they're going to be massively positive. It might be a little bit on the negative side. And if they're negative at all, I mean, even in their outlook, if their outlook isn't positive, I expect them to bring the market down. And I think it's likely because I think people are getting out somewhat more and probably are ordering somewhat less than they were in 2020. I think these are going to be, it's going to be the battle of the earnings of these companies fighting against higher interest expectations, and the debate will be how high interest rates could go. I think in hindsight, it's going to look hugely stupid that they didn't raise interest rates earlier and that they didn't stop the tapering immediately is like almost unbelievable too. So I think in hindsight, that's going to look kind of stupid, but hindsight is always better than foresight. But I think there's the possibility they could raise it a half a percentage point at the next meeting, and maybe that'll be the debate at each meeting whether it's going to be a quarter of a percent or a half percent, at least until they start to have some noticeable effect on the economy and slow things down because the demand is so great. Another thing that I think's going to affect things is even signs of increasing inflation. And I don't know about you, but in my own life, going to the grocery store is an experience of inflation on the spot. And food and energy are the two places where people notice it the most. And actually, energy is probably a place to invest simply because natural gas and oil will be disrupted probably by Russia invading Ukraine. Russia is one of the biggest exporters of oil in the world. I think at one time they were like second to Saudi Arabia. I don't know if that's the case right now. They're in the top five though for sure. So I think it could have a major effect on the price of energy and the price of food. I can see that's going up. So you'd have a hard time convincing me that interest rates aren't going to go up in a massive way, at least I would say for a year. I think this might be forced discipline to get us to 2 or 3%. And I think that's that's what a normal economy does. 2 or 3%, that's a low interest rate. And then that is nothing. It's just we've gotten so used to the stock market being propped up by zero interest rates. That is really ridiculous and pathetic that you can't have some kind of interest rate like 2 or 3%. So you have these three factors interplaying and battling in some ways against each other. The inflation expectations, the interest rate expectations, and the actual earnings being reported by these companies and their outlook for the next quarter. And maybe their outlook for the next quarter will be as important and probably more important than the earnings that they report, because the earnings they report are the past. There's a fourth overhang, a fourth huge factor that'll override any and all of this and makes all of this almost irrelevant. And that's if Russia invades Ukraine. I expect the market to go down at least 5% almost immediately, and probably 10% with the effects it could have on the banking system and the cost of energy and the effect it can have on the European countries. As it's been shown that sanctions, if the United States heavily sanctions Russia, that hurts not only Russia, but most of the European countries too, especially Germany. And if they're severe enough, they might even hurt us a little bit. Good luck investing. I'm going to play this of thinking that whichever way it goes, if the earnings of Google, Amazon, and Facebook, if those earnings drag down the market, I'm going to put a short on early, let's say. But it, and if they're good, I'll probably wait until Friday and then put a short on Friday, thinking that that effect will wear off. And also, we could have a black swan event, and a black swan event is an unpredictable bad event, like Russia invading the Ukraine. A black swan that comes out of nowhere. We could have a black swan event that immediately just crashes the market another 5% down and maybe 10%. And so I'm going to put that short on late Friday, regardless, and I'll put it on earlier if the earnings are bad from Google, Amazon, and Facebook. Good luck in your investing. Thanks a lot for listening. I will plan to see you in the future. And be sure to like and subscribe and share with friends and family. And I wish you the best.